Hello, welcome to my channel today. This is a King's Tutor. If it's the first time of joining us, ensure you like, comment, share, and subscribe to our channel. Okay, now we started a series on partnership accounts. We have seen the introduction video. We have seen different aspect of it. If you've not seen that video, I encourage you to watch the video. Check up here or check in my description. You'll see that. Okay, now I want to see the final account aspect of the partnership account, okay, that comprises of the trading profit or loss and um, the partnership trading profit or loss and appropriation account. Okay, we have seen the format. Please ensure you watch that. Okay, so in this question it says Mojisola, Nancy, and Benita are in partnership, sharing profit and loss in the ratio 4:3:3. The following is the trial balance of the partnership as at 30th June 2018. Capital account, we have Mojisola, Nancy, and Benita, which comprise of 22,500, 15,000, and 7,500. Current account, which is Mojisola, Nancy, and Benita, which is 875. Then 625 and 375. Okay, then the debtors you have 28,750. Creditors you have 43,750. Provision for bad debt you have 1,250. Bank you have 8,125. Land and building at cost 75,000. Office expenses 3,000. General expenses 2,000. Motor vehicle at cost 5,000. Sales 187,500. Purchases 106,250. Rent and rates 2,250. Salaries and wages 2,750. Selling expenses 15,000. Insurance 2,500. Stock at beginning 20,000. Accumulated depreciation, land and building 15,000, motor van 10,000. Drawings you have Modisola 5,000, Nancy 3,750, Benita 3,750. Bills payable 20,000. Bills receivable 1,250. Equipment 18,750. Now all sum up to be 323,750 on the debit and also on the credit. Now they said additional information. I have the additional information. Closing stock 37,500. Expenses accrued, selling expenses 350. Wages and salaries 325. Insurance 200 naira. Expenses prepaid, rent and rates 325. General expenses 235. Okay, why fixed assets are written off as follows: land and building 5% per annum at cost, motor vehicle 20% per annum at cost. 5. Bad debt written off 750. Provision for bad debt is to be made equal to 5% of outstanding debtors as at 30th June 2018. The partnership agreement covers the following information. A. Benita is to be allowed a salary of 7,500 per annum. B. Interest on capital is 10%. C. Interest to be charged on drawing is 5%. And you are required to prepare the first one, a trading profit and loss account for the year ended 30th June 2018, and appropriation account as at date. Appropriation account as at date. Okay, so this is a question they're asking us to solve. Now we are going to solve this. Now, if you're conversant with my channel and what I've been doing, I say whenever you have an additional information, ensure you treat that first before going ahead to solve. Okay, so that you adjust the items that needs to be adjusted. Okay, now let's proceed in the additional information first. That's the first thing we should do. Okay, now they said closing stock is 37,500. Okay, now we're gonna start. So if I rule this, So if we have Mojisola, Nancy, and Benita. Mojisola, Nancy, and Benita. If we have the adjustment, okay, now the first one here is closing. The first one here is closing stock, 37,500. So we just include it there. So just write closing stock, 37,500. Mind you, we've treated adjustment. We've treated different ways we can do adjustments. Check in the description, you'll see that how to treat adjustments. If you don't know how to do it, I've treated a video on that. Ensure you watch that. Watch that fast. Okay. So closing stock is 37,500. Now the second one, you have expenses. Expenses accrued. So we have expenses accrued. Okay, expense accrued. Now the first one is selling expenses, 350. Okay, you have selling expenses, 350. So now whenever it is accrued, we are to add what you have in the trial balance with what is given in the additional information. Okay, so we'll check in the trial balance if we have the selling expenses. Okay, so if we check here, selling expenses is 15,000. Okay, but we can see that 15,000. So and the expenses accrued. The expenses accrued. Selling expenses is 350. So we're going to add. So it will now be for selling expenses. Okay. It will be amount paid. Amount paid is 5,000 and add accrued of 350. Sorry, 15,000. So have 15,350. That is the selling expenses. So that's the first one. The same expenses accrued here is wages and salaries, 325. So we're going to check here if we have wages and salary. We have wages and salaries and wages here, 2,750. So accrued, we're going to add it. So the next one is wages or salaries and wages. Anyone? Wages and salaries. So we have amount paid for the wages and salaries is 2,750. I have 2,750. I said add accrued. Okay, accrued here is 325. So I have 325. So this is 5,703. That's 7,500. Okay. Now the next one is insurance, 200. Okay. Insurance 200. Now check here. We have insurance 725. Insurance 25. So we're gonna have insurance amount paid 2,500 and you have add accrued accrued of 200. So that is giving us 2,700. That's the first one. That's the second one. Now the third one, we have exalted it. The third one is expenses prepaid. Expenses prepaid. The first one is rent and rate. So we'll have the third one here. That's expenses prepaid. Expenses prepaid. So the first one we said is rent and rate. The rent and rate. Now if you check here, the rent and rate is 2,250. Okay, rent and rate 2,250. While the accrued is 325. So we're going to add prepaid. Now for prepaid, you less the amount in the trial balance, or you have less the amount in additional information from the one in the trial balance. Okay, so we have done the adjustment. Ensure you check that video for adjustment videos. Okay, so we have rent and rate 325, rent and rate 2,250. So said amounts that they have paid. Amount paid is 2,250. Now I say less prepaid of 325. Okay, now this will give us 5, this will give us 2, this will give us 1, 9, and 1. That is 1925. Okay, so that is that one. The next one is general expenses, which is 235. And we have general expenses here. Okay, can see that. So we have general expenses here 2,000. Okay, 2,000, and we have general expenses in the additional information 235. So as prepaid. So we're going to have here general expenses. Okay, general expenses, amount paid. Amount paid. They paid how much in general expenses? 2,000. 2,000. You know, less prepaid. Less prepaid of 235. So 2,000 minus this is supposed to give us 1,765. Okay. The next one, we're done with this part. The next one, they said fixed assets are written off as follows. Land and building 5% per annum at cost. Motor vehicle 20% per annum at cost. So the next one is depreciation. So we'll have depreciation. Land and building depreciation at 5% on their cost, not on the reduced balance. So we're going to check the cost of the fixed assets, which is the land and the building. So land and building at cost is 75,000. Okay, but they said here that it should be 5% on cost. That it should be 5% now on 75,000. Okay, so we will now have here depreciation is land and building. Land and building is 5% times 75,000. Okay, so and that will give us 5% on 25,000 will give us 3,750 for land and building. The next one, motor vehicle, 20% per annum at cost. Okay, so we'll check here also. Motor vehicle at cost is 25,000. Okay, so now we'll now do 20% on 25,000. So Our motor vehicle will be 20% on 25,000. Okay, so that will be 5,000. That will be 5,000. Okay, by the next one, we're done with that. The next one is a bad debt rating of 750. Bad debt rating of 750. So the first thing we have to do is to check if there is a bad debt in the question. If there's bad debt in the question. If there's bad debts, there's how we're supposed to treat it. I've done that in that video I told you. Go to the description, you see it, or check in my playlist and see adjustment of additional information. You will see how to treat additional information items. Okay, so there is none. There is none. So we'll have they're just informing us. So we'll just write bad debt 750. Bad debt 750. Okay, the next one, provision for bad debt is to be made equal to 5% of outstanding debtor. Provision for bad debt is to be made at 5% of outstanding debtor. Now, provision for bad debt have different ways in which you can apply it. Although I said I've done it, ensure you check that video. Now, in a situation whereby bad debt is at the additional information, we want to get a provision on good debt, not the one that is already bad. Okay, so bad debt, this 750 will have to be deducted from the debtor's figure already before we conduct that provision. So debtor's figure here is 43,750. So let's just write it. Provision for bad debt as 5% on debtors. Okay, so I said we're supposed to get this good debt first. So debtor says 28,750, and they're telling us that recently there's a debt that is already bad of 750. So we are going to remove that amount before we conduct the provision. That's how it's been done. So we are going to write the debtor's figure first. Remember, this provision is supposed to be on debtors. So 28,750, which is the provision debtors figure, minus 750, which is already bad. That's a bad debt. You now have 28,000. So this 28,000 is not the new debtors figure that will be calculated on this provision for bad debt percentage. So we'll now have 5% times this debtors figure, 28,000. Okay, now for my calculator, 5% of 28,000 will give me 1,400. Okay, now 1,400. Remember, when it comes to provision of bad debt, we don't explicitly write the amount we calculated. We have to get the difference. Okay, now remember, this 1,500 is what we just calculated. So we'll call it new provision. That's a new provision, the new one. We are going to check in the trial balance if there was a provision of bad debt before. If there was provision, okay, there is provision here. Look at it, provision for bad debt, 1,250. Okay, so we're going to compare it with the new one we calculated. So now 1,250 is the old provision. Now check if the old one they calculated before was this, the money they kept out for bad debt, that is the meaning of provision, was this, and this new one now they are not keeping this. It means that the old one was this, it increased to this. Okay, this is the old one, I was in the trial balance, and this is the new one we calculated. So it means it moved from 1,250 to 1,004. It means there's an increase in provision for bad debt. So we are going to get a difference, which is 150. This minus this 150. So this 150 is an increase. And this increase will go toward the profit or loss account as an expenses. But had it been this new provision is 1,200, why this old one is 1,250, it means that it reduced. If old is 1,250, new is 1,200, it moves down, it reduced, which is what a decrease. It would have been an income. Okay, so I've treated this and sure you watch that video. So that is the provision for bad debt. Okay, so that is all on that. Now they now said in the partnership agreement, the first one, Benita is to be allowed a salary of 7.5. Okay, so we're just going to indicate it there. Benita, salary of 7,500. Okay, the next one, they said interest on capital is to be 10%. Interest on capital is to be 10%. So let's calculate the interest on capital. But first, we are going to know what is the capital. Okay, so let's just say that interest on capital is 10%. Okay, now let's know the capital. So the first one is Moji Solar. Let's first of all know how much you contributed as capital. Okay, so look at what they contributed as capital. Moji Solar 22,500, Nancy 15,000, Benita 7.5. Okay, so it will now be Moji Solar, because I say 10%, now it is 10 over 100 times. Now Moji Solar is 22,500, so we have 22,500 over this. So 10% on this will give us 2,250. That's for Moji Solar. The next one is Nancy. So Nancy is also 10% on 15,000. So we have 15,000. So 10% of 15,000 will give us 1.5. Okay. Why? The next one is Benita. Benita is also 10% on 7.5, which is giving us 750. So those are the interest on what? Capital. Okay. Now the next one, they said interest to be charged on drawings 5%. So they also made drawings. Interest to be charged on drawings 5%. So we're going to write this also. Interest on drawings equal 5%. Okay, now let's check the amount they collected as drawings. So you will check, look at the drawings. Moji Solar is 5,000. So we're going to write Moji Solar, that's 5% times 5,000. It will give us 250. The next one is Nancy. Okay, so Nancy now will be 3,750. So it is 5% times 3,750. So 5% on 3,750 will give us 187.5. Okay, 187.5. So that is what it will give to us. The next one is Benita. Benita, 5% on same 3,750. 5% on 3,750 is 1,875. Okay, 1,875. So that's the adjustment. You see why it's important to do the adjustment. So we are done. So they say prepare the trading profit or loss account. So that is what we are to prepare now, and the appropriation. That's what we are to prepare now. Okay, so we're going to write it here. The trading a trading profit or loss account as at 30th of June 2018. Okay, so if we do that, now we're going to have, okay, so now the first thing in the trading profit or loss account is always our opening stock. So let's see the opening stock at the beginning. Stock at beginning is 20,000. Okay, so we're going to write it there. Opening stock 20,000. The next one is purchases. Now please, while you're doing this, whenever if it's an exam situation, once anyone you recorded, you take it. Okay, so you don't mistaking it again. So the next one is purchases, 106,250. So we said add purchases 106,250. The next one is, so when you add it together, this will give us 126,250. Okay, that's this. The next one will be to check if there is return outward or carriage inward. Yes, return outward or carriage inward. There is none. Now let's our closing stock. Okay, we already have it here, closing stock. Remember, every item under this will appear twice if you're preparing your what? Your trading profit or loss account and balance sheet. And then we will ask to prepare balance sheet also. Okay, so you take note. So we're going to have less closing stock. We have closing stock here as 37,500. 37,500. So this minus 37,500 from our calculator will give us 88,750. Okay, so now the next one, let's record our right hand side. It's always our sales. Okay, now let's see what is the sales here. The sales is 187,500. So we have 187,500. Okay, that is the sales. 187,500. So there is another thing. Remember, this will not be cost of goods sold. Okay, so sales minus the cost of goods sold, we have to give us our gross profit. We have to give us our gross profit. Okay, now the gross profit will now be sales minus this. So 187,500. 187,500 minus 88,750 will give us 98,750. Okay, so when you add these two together, you have 187,500. Okay, and this is also 187,500. Now the next one, gross profit brought down 98,750. Okay, gross profit from here brought down here 98,750. Now is for all the expenses. We are going to list them out. Now we're going to start from here so that we don't miss any item. Okay, so the first one, capital cannot come, current cannot come, asset expenses, debtors cannot come, creditors cannot come. Now provision for bad debt is this, but remember that we have done an adjustment on provision of bad debt, so you don't have to record this. You see why it's important to do the adjustment first. Okay, so you have provision for bad debt. Now you're going to check it here. Look at the one we are recording. Okay, 150. So right here, provision for bad debt 150. Okay, the next one, bank cannot come, land cannot come. Next one, office expenses 3,000. Now whenever you get to this situation, you have to check if that expenses was adjusted. If it was adjusted, okay, if it was adjusted. So we're gonna check this now. We're gonna check this now. If we check here, it wasn't what adjusted. So the office expenses will now be 3,000. So we just have to record it here. Office expenses 3,000. Okay. Now the next one is general expenses. Okay. General expenses is 2,000. But let's check if there was an adjustment in general expenses. General expenses was adjusted. Look at it. Okay. And it is agreed to be 1765. So it is adjusted value, right? That is why it is important you do it first. So I have general expenses 1765. Okay. The next one is motor vehicle at cost, sales, purchases, rent and rates 2,250. Now we have to check rent and rate. Rent and rate. Look at it here. 1925. So we have rent and rate 1925. Okay, so the next one is salaries and wages 2,750. Let's check also if we have done adjustment. We should have done that adjustment. Look at it, 3,750. So we have salaries and wages 3,075. Okay, so now you come again, selling expenses 15,000. Let's check if there was an adjustment. Selling expenses, look at it. So that is all right. Selling expenses 15,350. The next one, insurance 2,500. Insurance 2,500. Let's check if there was adjustment on insurance. Yes, there is. 27. So we have insurance 2,700. Okay. Now the next one, stock at beginning. No, it's not it's not an expense. Accumulated depreciation for land and building. Now we have done this, accumulated will not come here. We have done a current depreciation. This accumulated will only go to the balance sheet. Okay, so but we have done a current one, which we are going to record and check there. Look at it, the depreciation for land and building. Okay, so we're going to write it, depreciation is for land and building as 3,750, and motor vehicle as 5,000. Okay, the next one is, after this you come to drawings, then bills payable, bills receivable, equipment, Now once you're done with this aspect, now you have to go to the additional information. If there was an expenses that appeared in additional information that was not in the trial balance that you have not recorded. So we have closing stock here, we have recorded that. We have selling expenses, wages and insurance, we've recorded that. We have rent and rate, general expenses, we have recorded that. Now we have fixed asset, we have recorded that. Land and building, motor vehicle recorded. Bad debt, we have not recorded bad debt. It only appeared in the additional information. So you see why you have to follow it in chronological order. So bad debt rating of 750. Okay, so we'll just come here and you write it there as bad debt 750. Okay, so I think that is all. Now let's add. Okay, so if we have this if I have this and so if this is 98,750, so if you add all this now, if you add all this and deduct it from 98,750, it's supposed to give us a net profit. Okay, a net profit. And net profit, when you add all this using our calculator, 150 plus 3,000 plus 1,765 plus 1,925 plus 3,075 plus 15,350 plus 27 plus 3,750 plus 5,000 and plus 750, and deduct it from this, it will give us a net profit of 61,285. So that when you add everything now, it becomes 98,750. Okay, so that is the trading profit or loss account. Okay, now that is the first aspect they ask us to prepare. And the second one is the appropriation account. Now we have done appropriation account, we have seen the format, and sure you watch that. Let's do the appropriation account. Appropriation account. Appropriation account. Okay, so in the appropriation account, in the adjustment with it, we said the net profit that was gotten from the trading profit or loss account. Okay, that is net profit. We have to come here. We said the right hand side of the appropriation account, that's the credit side, is what is supposed to be earned by the partnership business, while the debit side is what they're supposed to pay the partners. Okay, so the net profit will come here, the net profit as 61,285. Okay, that's the net profit. Now another item that also comes here is the interest on drawings. Interest on drawings. Interest on drawings. Okay, so if we have interest on drawings, now we did it here. Look at it in the adjustment. So the first one is Mojisola. Mojisola as 250. Another one is Nancy as 187.5. Another one is Benita as 187.5. So if you add this now, you have 625. Okay, so in the debit side here is what they are going to pay. Now they say they are going to pay salary to Benita. Look at it, we've written here, salary to Benita as 7,500. Okay, another thing here is the interest on capital. The interest on capital. Okay, now the interest on capital, we have also did that here. So it will now be for Mojisola now. Mojisola is 2,250. 2,250. The next one is Nancy, 1,500. And the next one is Benita. Benita at 750. So when you add them now, this plus this plus this will give us 4,500. Okay. Now, when we add this, it is not time for our share of profit or share of loss. Now, I said before, there's share of profit when the right hand side is greater than the left hand side. Okay, the credit side is greater than the debit side. That is when there is what share of what profit. Okay, so looking at it now, our right hand side should be greater than our left hand side. So here now, if we add up this now, if we add up this 61,285 plus 625, it is supposed to give us 61910. Okay, 61910. So So what will now be our share of profits, because there is profit, because what the business receives more than what they paid. So the remaining amount is supposed to be shared among the partners. Okay, and they have, remember, they have a profit or loss sharing ratio at the beginning. They told us, look at it here. Except they are silent, it is equal. But if they give us a ratio, look at it, 4:3:3. Okay, so the share of profits now, 5 plus 5 will give us this is 0, this is 10, 0, 1, this is 12,000. So 12,000 minus 61,910 will give us 49,910. Okay, so it is that 49,910 that is what will be used now to share. Okay, did you get that? We said this is 61,910. Now when you add this now, this will give us 12,000. Now, this minus 12,000, the amount now will be 49,000. Look at it, 49,910. That is now the profit, because this minus the total of this will give us 49,910. Now, in this 49,910, that is what is to be shared among these people, okay, in their share profit or loss sharing ratio. And their profit or loss sharing ratio is 4:3:3 respectively, the way their name appears. So for Mojisola it is 4, for Nancy it is 3, for Benita it is 3. So the first thing we have to do is to add it together. 4 plus 3 plus 3 will give us 10 as a total. So for the first one, which is Mojisola, look at how it will appear. It will be Mojisola as Mojisola first one is 4 over the total is 10 times this profit. Okay, 49,910 over 1. Okay, so if we do that, we have 19,964. Okay, as for Mojisola, the next one is Nancy. Now, Nancy also, it is 3. So it is 3 over total is 10 times the profit is 49,910 over 1. So this divided by this times this will give us 14973. 14973. So the same way for Benita. Benita have the same ratio with Nancy. So we have 3 over 10 times 49,910 over 1. It should give us the same as 14973. So to know if you're actually correct, if you add these 3 together, it is also supposed to give us that 49,910. Okay, so that when you now add it to what you have here, you have 61,910. Now that is the appropriation account. Okay, so that is how to solve a question relating to the partnership trading profit or loss account and the appropriation account. Please, we'll see other videos on this drop. If you have any question, please ensure you drop it in the comment section below. Even if you're downloading this video, ensure you just like the video, please, while you're still online. Like, it won't take much so that we'll get to meet other students. And also please comment there. Okay, please ensure you comment there and ask a question you want or a topic you want. Okay, thank you very much. Ensure you like, comment, subscribe and share. Thank you very much. So we'll see you again in the next video, where we're going to take other difficult examples, okay, to explain further. Thank you very much.